So realized vol did spike into the 80s, obviously with that big knee-jerk higher and then the reversal. So quite a lot of chop there. So in both directions. But Ethereum realized was the one that surprised because that actually spiked as well with the very sharp rally that we saw as people rotated into ETH. Implied vols were crushed, unsurprisingly. We had been warning of the vol reset. So about a week ago, implied vols were here and they dropped by about 20 points back to a more normal level of, say, 55 on Bitcoin and about just shy of 60 on Ethereum. So implied vols really collapsing. And whilst realized obviously had a spike, but then drifted back down a little, spike there, drifted down a little, it is still a lot higher than where implieds currently are. So we've got a negative vol carry, deep negative vol carry in both of these, but that is very common when you have an event that shocks the market, that moves the market, let's say, not shocks the market. You have an event that moves the market, but it's known to be an event that's going to move the market, and therefore now implieds reprice because they're forward looking and they say, well, the event's passed, the move's done, and now we're going to go to a normal state of play. A normal state of play in crypto markets over the last, say, few months has more been a realized of around 40 to 50, not a realized of 80, right? So that's why implies have come down to reflect that. Okay, that is realized vol. Then if we jump over to term structure, you can see, you know, we were in very backwardated curve in Bitcoin, front end obviously collapsing, middle and the back end collapsing the least. So we've got about a 10 vol reset in the front, back end only resetting 2 to 3 vols. Very, very normal. Now there's no real kink. I mean, we are starting to see a little bit of slope between, say, March at 53 and June at 57. But as April becomes listed, that's probably going to have some sort of kink in it, maybe to play the halving, although the halving's not necessarily as much of a gap event as, say, the ETFs were, right? Because the halving's more of a slower burning sort of trend. So we'll see how that plays out, but I wouldn't be surprised to see March, June calendars continue to go bid. So March is what, 2 months away. So this part of the curve is going to come under pressure. This part of the curve is going to hold up better. Those calendars are likely to steepen dramatically over the next couple of months, in my opinion. Ethereum term structure, similar shifts to BTC. Steeper contango, though. We've got 56 in the front and 65 at the back. So we have got a little bit more of a contango in Ethereum. Now, people have been talking about May time as being the timing on an Ethereum ETF potentially. So similar story. You've got a 3 vol premium between March and June. We have already seen a lot of flows, selling March, buying June over the last couple of months in Ethereum. And I think that's only going to continue, right? So similar story. I think owning calendars, whatever you're doing, owning calendars, selling March, owning June, maybe owning a little even after June, are trades that are likely to kind of work well in crypto over the coming months, in my opinion. Okay. And you are also likely to see supply come in the short dated expiries, right? If they're going to sell anything in Ethereum, it's the super short dated stuff they're going to sell. They're not going to sell anything that potentially captures, you know, the ETF dates, and that's the stuff that's going to be very well bid. Yeah. All right. That is term structure. Looking at the relative value side of things, you know, you can see the curve did rally a little bit in terms of the spread between ETH and Bitcoin. So the front end had gone into Bitcoin premium. That's all gone. So we've gone back to a 2 vol premium in the front for Ethereum. The back end got as high as 8 vols for like the 3-month expiry. So it's 7 to 8 vols in the back end there. So all of it shifting higher. Realized vols obviously tracking at about 5 on a 30-day and about 3 on a 10-day. So it's consistent with the fact that Ethereum is still out realizing Bitcoin on many timeframes. And so it's going back to what you'd expect now that the Bitcoin event has passed. Okay. And now I would expect to see a 10 vol premium easily at some point. You can see the chart here. We did kind of threaten to touch on the 3-month. We did touch 10. We have drifted back a little bit, but I suspect this thing is trending higher. I think as we get closer to, you know, being more certain of an Ethereum ETF, and Ethereum does start to break through 3,000 on the upside, which I suspect it will. Well, I suspect it will outperform at least. Then you'll probably see this spread go into the kind of 10 to 15 range, I would have thought at the very least. And that would not be a surprise for me to see whatsoever. As we already said, 25% rally off the intra-week lows in the spot spread. and the realized vol is reflecting where the spread trades. Now, the technical picture looks very different across two assets. This should be supportive for Ethereum. Call switches don't look as attractive as they did before because obviously the vol spread is richening the further you go out. But calendars that lean on the fact that the halving and the potential ETF approvals in Q2, we think that's the way to go. We think doing on calendar trades, and you can even do it cross asset by saying you sell Bitcoin calls in the 1 to 2 month expiry that doesn't contain the halving, and then you buy 3 to 6 month Ethereum calls, which contains the halving, which should drag all of crypto higher potentially if they're all correlated, and you also get potentially to capture the Ethereum ETF approvals. So that's why 3 to 6 months on Ethereum, using those calls and then funding some of that premium with selling short dated calls in Bitcoin. We think that's quite a smart way to position. Okay, then SKEW. So SKEW wise, shifting deeper into put premium, those front expiries out to 2 months especially. So we've got weekly SKEW trading at 5 vols for put premium. Hedging activity did come in as we broke below that 45K level on Bitcoin. Long-dated SKEW past 3 months is still flat or call premium. So out to the back end, it's about 6 vols call premium for December 2024. So quite a difference where you look in terms of the curve, where the premium lies. Similar story on Ethereum SKEW, short-term put premium, long-term call premium. Levels are similar to where they were last week. So you've got about 2 vol put premium in the front end on Ethereum and a 5 vol call premium in the back. But notice that Bitcoin put premium has overtaken Ethereum in the front. And I think that's quite interesting. So if you look here, Bitcoin put premium in the 1 month is above Ethereum put premium. That's when these red bars go negative, basically. Okay, that's now Bitcoin put premium you see here as well on 3 month, whereas you've got a bit more of a call premium on Ethereum on 3 months as well. So what is that telling us? That's telling us that if the narrative is switching to Ethereum, we may now start to see Bitcoin put SKEW stay consistently above Ethereum in the short end of the curve, because we know that generally people use short end options for their hedging. And what they might be doing is they might be saying, well, we want to hedge our overall broad crypto beta. If, for example, the Fed keeps rates higher for longer than what we don't expect, we don't get the pivot as soon as the market's pricing and the macro doesn't look so great, then Bitcoin's going to go down. It's going to drag all of crypto with it. So you're not going to be able to escape the kind of broad crypto beta. So you use the Bitcoin puts to hedge that because they trade on a cheaper vol anyway. You're using those to hedge. And then against that, you might be leaning long delta on things like Ethereum or the altcoins or whatever it is to capture the alpha that those things give you. Because the idea is that if something's really going to rally hard in crypto, Bitcoin's done it. So now it's on the other coins to do their thing, right? So you want to kind of lean long in the stuff that's going to outperform on the rally, but you want to use the short Bitcoin hedges to kind of protect you against broad market beta. And that's what's going to create a bit of a bid for Bitcoin SKEW relative to the other SKEWs. That's what I suspect is going to happen. I think you're going to see a lot more call activity and call interest in Ethereum, just like we saw last week. And you're going to see more put interest to do that macro hedge in Bitcoin because you no longer got that narrative anymore for Bitcoin. Now, we'll see how the halving plays into that scenario. But I don't think the halving is anything so surprising or anything that's going to have like a knee-jerk move on spot. I think that's just a dynamic that is underlying Bitcoin that everyone knows. So that's why I think that's the behavior we are likely to see. Okay. Dashboards, obviously, we're saying sell calls in Bitcoin. They've now moved over to selling puts or put spreads. Bit early for that, if you ask me. Probably look for a 40K or 38K before doing anything like that. And then Ethereum still in sell calls because obviously spot did quite well. Spot was up 7.6% on Ethereum, whereas it was down 10% or so on Bitcoin. Okay, so that's what your compasses are saying. Flow-wise, so volumes were up 80% in BTC options, up to $12.5 billion of notional. So that's a chunk. Okay, and that's just Deribit notionals, right? Bullish trades looking for ETF flows to fuel the upside break. Used the initial dip We went 49 back to 45, and they used that dip to kind of buy January 50K calls. They were selling out some call spreads as well that were in the money, but they were replacing them with January calls, February 50, 60K call spreads, March call spreads, things like that. So we've circled all of those here on these bars where you can see all the call spread activity that was going on. But then as we broke below, then it was like, okay, get me some protection on the book. And that's where you got 19th to 26th of January puts getting bought in the 42K strike. So everyone piling into that protection because they're like, okay, if this 45K level is broken, we don't know how low this thing wants to go. So we did see an influx of put buying as prices rejected the move, and those put buyers came in. Okay, now Ethereum, like I said, the flow's a little bit different. So we had similar sort of increase percentage-wise in option volume, 80%, but up to $5 billion. Bullish bias, obviously massively outperforming on spot. So a massive buyer of the February 27.31 call spread. That's these big orange bars here. That came in 40,000 lots. So that is a massive chunk. And that really helped Ethereum push higher. And then longer dated, other longer dated call spreads in March, December, etc. also trading. We saw a bullish risk reversal in March, selling the 23 puts to buy the 35 calls. We also saw January puts getting sold on the dip as well. So it's just a different dynamic. People aren't worried really about Ethereum now. They're just basically using dips to sell puts and buy calls spreads. Whereas in Bitcoin, they're saying, okay, yeah, buy some puts and be protected. So there's a difference in that flow clearly that we're seeing. And that is actually filtering through to what we're seeing in dealer positioning. So because of that, because people are buying puts in Bitcoin, it has flipped dealer positioning quite negative again. So you can see here, Bitcoin, we're looking at like $40 million of gamma negative, somewhere around there per 1% of spot price move. Big strike at 42, as mentioned. But the only places where there's really any long strikes are kind of this 45K area on 19th of Jan and the 50K area on 26th of Jan. So these don't have much gamma on them at all. So that's why we're dominated right now by the 42 short gamma. If we rally, that will dissipate a bit, but it's not going to get long anytime soon because we're nowhere near the long strikes. So I suspect BTC is going to be chopping around in this zone near 42K because the street is quite short gamma here, right? So, and it's trying to find its feet and find its equilibrium level. So it wouldn't surprise me if we did get a bit of volatility, bit of realized down towards 40K or even below, because the street does look like it's quite short gamma here. Now, opposite picture on Ethereum. We did see a dip as the market tried to rally at 2,700, and we did see a load of shorts up there. But as we faded back down, we've gone straight back to long gamma territory again, or very neutral. I wouldn't say it's materially long, it's more neutral. And that's because, you know, we've got this long strike here at 2,400, offset by this big short strike at 25, and then there's loads of strikes above that. So right now we're quite balanced in terms of the net gamma positioning. We did see some put selling on that 26 line as well, which supplied the street with some gamma. Yeah, so that's kind of where it is. If we were to see a rally back towards 2,800, we are going to move away from the longs and towards the shorts, and that is probably going to fuel a bit of a rally because the short dealers will flip short gamma again, and that might give them a bit of buying to do. But we think that can only really happen once BTC stabilizes, finds its feet, finds its support, and then takes the whole crypto market higher, and Ethereum can have another go and be the higher beta asset. So that's kind of how we think that is likely to play out. That's the summary for this week in crypto. Thanks a lot. As always, I'll catch you guys later.